In this video, I'm going to be talking about what a prop firm is, and I'm also going to be listing out things you need to look out for before choosing a prop firm. First of all, what is a prop firm, or what is a proprietary trading firm, as many of us know it? So a prop firm is basically a company or an investment firm or an organization that basically offers traders, successful traders, capital to trade with, and more or less the capital these guys offer is usually on the large side, more or less larger than what the average trader would normally fund his account. And most importantly, they offer you capital to trade, and there's usually a profit split on the capital you make, right? So that's being said, so what are the things you need to look out for before choosing a prop firm? Okay, so there are several prop firms out there. I wouldn't be mentioning any names for now, but more or less they usually have similar packages. In fact, before doing this video, I did a research on a couple of prop firms, and I realized most of them have very similar packages. And for the purpose of this video, I'm mostly going to be talking about the evaluation challenge that most of these prop firms have. So basically, the challenge phase a prop firm offers you is the demo trial period, where they want you to trade and prove to them that you're actually a successful trader, that you actually know how to trade, you know how to manage risk, and you can properly manage their funds if they let you in to manage their funds. So basically, that is how a prop firm works, and basically that is how the challenge phase works. The things you need to figure out, or the things you need to find out before you go ahead and choose a prop firm: number one, you need to know what account size does this prop firm offer. For several prop firms out there, the account sizes they offer traders could range from $5,000 up to about $2.4 million. However, you realize for many of them, 5,000 to 200,000 is usually the limit, and then you can actually grow till they allow you access to $1 million, $2.4 million, and the like. So if you look at this, the amount they are actually willing to allow you as a trader trade with, it's usually larger than what the average forex trader out there could really afford to fund his own or her own personal account. Next, you need to figure out is the payment type for the challenge or for the prop firm. It could be either of two ways. For some of them, you have subscription payments, which means every month you have to keep paying a particular token to access the account that they offer you. And for many of them also, it's just a one-off payment. Personally, I would advise the one-off payment because it puts less pressure on you as a trader. If you have to pay a subscription fee every month to access the money, then that means you are going to definitely have to first of all factor in the subscription fee in making profits before you now talk about exactly how much profit you will now be trying to achieve on that account. Then you factor in the profit split likewise. So either ways you look at it, it's usually better to go for a prop firm that offers a one-off subscription fee. And next you need to consider is their trading platform. What trading platform does this prop firm offer you? Is it the traditional MT4 or MT5, or do they have their own proprietary trading platform? So there has been a lot of news, a lot of reviews about some prop firms that have their own proprietary trading platform, and the general conception about it is for many of them who have their own trading platforms, they usually seem to influence the market's direction. They usually seem to have a lot of mishaps on those their platforms, a lot of I would like call it manipulation. So you need to be careful about that. I'm not saying they all do that. However, there are some of them that reviews have shown that that is actually what they do. They manipulate their own platform. So I think it's easier to work with a prop firm that actually offers you the traditional MT4 or MT5, because it's less likely that they will have access to actually manipulate MT4 or MT5. And next, you need to consider what instruments does this prop firm allow you to trade. If you're someone who trades crypto, many prop firms do not allow this. If you're someone who trades indices, some prop firms allow, some do not. If you're someone who trades gold, some prop firms do not allow that either. However, for Forex, so many prop firms allow that. So whatever instrument you mastered, whatever instrument you actually know you are good at, it should be one of the factors you consider when choosing your prop firm. The next thing you need to consider is, does this prop firm allow EAs, or do they allow expert advisor, or do they allow you to use robots in your trading? Now, robots could range from EAs that just do trade management, help you break even, help you partial close your trades, help you take profit and the likes, or help you close your trades. And they could also be EAs that actually help you pick trades and manage trades likewise. However, you need to find out, this prop firm I'm using, do they allow me to use EA? You need to find that out, because if it's a prop firm that does not allow the use of robots and you go ahead to use a robot, then definitely you get disqualified. Next, you need to talk about leverage. You need to consider, what leverage does this prop firm offer me? Traditionally, most of what you can achieve, or what you can find in the industry, is usually between 1:10 to 1:100. And some of them actually do offer as much as 1:500. In my opinion, I honestly think you should stick with a prop firm that offers 1:50, and 1:100 should be the max leverage you should be looking out for. I mean, the portfolio is large enough, the capital is large enough, you don't need so much leverage, so you don't get to over risk on the account. And it's also very possible that a prop firm that will be offering you more than 1:100 actually do not want you to even pass the challenge in the first place. They might just be one of those prop firms out there who are simply making money off the subscriptions. And also, the next factor you need to consider is, do they allow you to hold trades overnight, and do they allow you to hold trades over the weekend? So many prop firms frown at this. In fact, a very popular prop firm of recent just launched a swing type of evaluation, and I think that's actually good if you're a swing trader. But if you are not a swing trader, then I believe you need you should be able to work better with so many of these prop firms, because many of them are actually seeking for intraday traders. They do not want traders to trade over the weekend, because when market opens on a Sunday night, there could be gaps, and many of them do not want those gaps and slippages to affect their capital when you are trading for them. So you need to find out, if you are a swing trader, find a prop firm that allows you to hold trades over the weekend. However, if you're an intraday trader, then most prop firms actually do allow you to trade as an intraday trader or as a scalper, since you most likely will not need to hold trades over the weekend. However, you need to find this out to understand basically what kind of prop firm am I thinking of working with, or am I going to work with. Another very important factor you need to consider is, does this prop firm allow news trading? Do they allow me to trade the news? So many prop firms do not allow news trading, because news comes out, there could be several spikes, several manipulations in the market. So many of them do not allow. But if you're someone who actually knows how to maximize the news effects, then probably you need to find out a prop firm that allows you to trade even during news. So news trading, you definitely need to find out, does this prop firm allow me to trade during news? And next, you talk about their challenge models. So for many prop firms, they have the rapid challenge, they have the evaluation phase, they have the one-off, several of them like that. However, I will be talking more on the evaluation challenge, and I'll be focusing and even advising that, because most of the time we find out that the evaluation fee to get started is usually lesser. The rules are usually easier and less complicated compared to other kind of challenges, and then even the fee is usually less than 1% of the actual capital you are going to get if you pass it. And more or less, for many prop firms also, the registration fee for the evaluation phase is usually refundable upon your first profit withdrawal. So you need to find out what kind of challenge models do they have, and also how long do these challenge models last. For most prop firms, the evaluation phase is usually divided into two phases: the challenge phase and the verification phase. The challenge phase is usually 30 calendar days that they allow you to trade, and the verification phase is usually 60 calendar days to trade rather. Verification 60 calendar days, while the challenge phase 30 calendar days. So you need to verify how many days your prop firm will actually allow you to trade. Then next, you need to consider what is the profit target for these phases. Likewise, for so many prop firms, the challenge phase, the profit target is usually 10%. However, for some new prop firms which are more competitive, the challenge phase, the profit target is 8%, and the verification phase, the profit target is 4%. And for some others, or for most of them, the challenge phase profit target is 10%, while the verification phase for 60 days, the profit target is 5%. So you need to find out which one would work better for you, which one is easier for you, and then you simply just work with that. So now you found out the profit target, the challenge model, how long it lasts. You also need to find out what is the risk limit for this particular prop firm. The risk limit, that is, what is the daily drawdown, which most of them have, and what is the overall drawdown. So basically what drawdown means, drawdown is not the same as loss. So many traders tend to confuse this. What drawdown means is the amount of floating trade that you actually have in loss, which means, for instance, if say you've lost $2,000 on a particular account, and then you have trades running in minus $3,000. Those trades have not yet closed, however they are running in minus $3,000. It means your drawdown automatically becomes $5,000. Even if those trades eventually close out a profit of say $10,000, your drawdown was still $5,000. So you need to consider this while trading. And for so many of them, they have a daily drawdown limit and they have an overall drawdown limit. So the way that works is, per day they might tell you your daily drawdown limit is 5%, which means on a $100,000 account, your account must never have a drawdown of up to $5,000 in a particular day. However, they could then say the overall drawdown limit is maybe 20%, which means you could take a 4% loss today, a 4% loss tomorrow, a 4% loss next tomorrow. However, if it adds up and eventually again gets to 20% drawdown, then you lose the challenge. So you need to verify and be sure what their risk limit is, what the risk limit of this prop firm you're considering trading with actually is. Next, you need to look at lot size limits. Some of them do not have this, but some have this. And personally, I think you should, or rather, I would advise you avoid any prop firm that offers you a lot size limit. Which means lot size limit is basically they are telling you on our account you must trade with a minimum of XYZ lot size and a maximum of XYZ lot size. I honestly think a prop firm who offers that more or less is setting you up for failure, simply because it should be a function of risk. Your lot size should be a function of risk. I could be trading using the lot size of one standard lot with a risk of just $20. That means my one standard lot, the stop loss is just 2 pips, and at the same time I could be trading with a lot size of 0.10, that's one mini lot size, with a risk of up to $1,000, which means my stop loss would be about 1,000 pips or thereabouts, just using it as an example. So basically I think lot size limit limits what exactly you can do, and it's a very complex rule I think you should try to avoid as much as you can. Then you need to consider what the minimum trading days to pass the challenge is. So you could be a very good trader and you get a very good trade on the first day of your challenge, and you meet your profit target on day one. However, your prop firm could then add as a rule that you need to trade for a minimum of 5 days, a minimum of 10 days, depending on the prop firm. So you need to find out what is the minimum trading days that this prop firm actually allows you to trade, or actually needs you to trade. For some of them out there, it's 5 days. For some of them, it's 10 days. And what that means is you must place a trade every day for the amount of the minimum days. So if the minimum days is 5 days, it means you must place a trade every day for at least 5 days within the 30 days challenge phase, or within the 60 days verification phase. So you need to find out how this works. And I think that rule is basically just to find out if you are consistent with your strategy, and it's not just guesswork. Probably you found one guess trade and that was it. And next, you need to consider the profit split. I mean, you are in this for the profit in the first place. So how much exactly are they willing to split the profits you've made with you? For some of them out there, it's 50-50. For some, it's 70-30. And for some more competitive prop firms out there, they actually do offer 80%, 85%, and even as much as 90%. So you need to be sure on the profit split before you get in. And next, you also need to consider the scaling plan. The scaling plan is basically how they increase the amount of capital they offer you within a period of consistency. For instance, some prop firms have it as a rule: if you're consistent with about 10% profit targets for about 2-3 months, they then double the amount of capital they offer you to trade with. So you need to find out what their scaling plan is, so you also know how to factor that into your profit target, so you can obviously get more capital to make more money. And lastly, you need to consider their discounts and their retrial plan. Obviously, if you're a good trader, you know you won't get good trades every day, so it's very possible you might actually get enough trades to make profit, but not enough to meet the profit target. In such cases, what does your prop firm say about that? Will they allow you a retrial, or will they just yank you up? So you need to discover, and you need to find out what exactly are their rules concerning retrial. For some prop firms, if you close in profit but you do not meet the profit target, they give you a free retrial. For some of them, they would even extend the number of days for you to trade, while for some of them, they tell you to pay the 100% fee again to get started, as if you're starting afresh. So you need to find out which one favors you. I think you need to find out first before you even get started, and so you can work with this. What this means is, even if you don't get a good enough trade, you should have it at the back of your mind that if I at least close in profit without violating the rules, I could always take this challenge phase again for free or at a discounted price. So these are the things you need to consider before choosing a prop trading firm. Don't forget, a prop trading firm actually offers you much more capital that you will normally fund your account most of the time. And one of the reasons I would advise using a prop trading firm is because of the access to capital. Most of the time, the capital they offer is much larger than what the average trader could actually afford to fund his own personal account. And there are several other benefits. I'll be doing a video on that and posting it very soon. So make sure you subscribe to my YouTube channel, and also feel free to join my free Telegram community, where I do share trade ideas and trade signals, and also teach on how you can easily pass your prop firm challenge. So that's it from me. I'm with FX. Bye for now.